Hi traders, welcome to Admiral Markets. My name is Chris. Thanks for joining us. Today's focus is on wave and chart patterns. And this is a strategy webinar, but we will be taking a look at live charts as well. So patterns, of course, very important for understanding the market structure, for understanding the psychology, or at least the movements that we see on the charts. And they provide us a guidance what we could expect for the future, right? By recognizing patterns, by identifying patterns, we can see what the market is up to and uh, kind of predict or at least identify where we would like to trade it. So we'll be diving into patterns in more detail, specifically wave and chart patterns. Before we do that, though, as always, two disclaimers we need to discuss. One is the fact that this webinar is shown to a global audience but may not be suitable for everyone. Therefore, please check or visit admiralmarketsglobal.com, select your country of residence, and contact the appropriate entity to find out if it is suitable for you. Second, please note that trading for exchange and global financial markets is considered higher risk. Please seek the advice of an independent financial advisor for more information on that. This webinar is for informational and educational purposes only. By continuing watching this webinar, you agree with this disclaimer and you are aware of the risk involved when trading. All right, so as I just mentioned already, the webinar is hosted by Admiral Markets. And for more info with regard to Admiral Markets, you can check out admiralmarkets.com. Just click on any of these tabs to find out the information you're interested in. If you're more interested in analysis or webinars, check out Analytics and Education. All right. If you want to find out what platforms to trade, check out the MetaTrader 4 Supreme Edition, for instance. It's available for MT4 and MT5. And the Supreme Edition is an extra plugin made by Admiral Markets, has 60 plus extra features there that range from indicators to help with risk management. So we'll be showing some of those indicators in the live webinar. And yeah, also, of course, what you can trade and how you can start trading. So all of that is right here. And in this slide, you see some, the newest news, basically. It's referring to cryptocurrencies. If you haven't checked it out, the DAX. It's referring to that MetaTrader 4 Supreme Edition I just mentioned, right? And some other things. The webinars, there's some new webinars next week, including Nenet and some other traders that are joining, and the MT5. So those are the newest updates. With regard to the markets, let's go and take a look at the charts right now. So, excuse me. So, basically, let's start with the euro dollar. I think everyone is interested in the euro dollar. So, what kind of patterns did we see with regard to the euro dollar this week? Well, basically, we saw an impulsive structure, an impulsive pattern to the upside, and we saw a corrective pattern to the downside, right? And if you look at the Fibonacci support levels, price was at the 23.6 fib, which could provide a bounce zone or the 38. So it could provide a bounce or break. We were looking at the break, right? Also, or the bounce. Sorry, I should use blue, right? And the same would be valid for the 38.2 fib, a bounce or break. So price bounced. But when it approached the 23.6 fib, it started to make a falling wedge pattern. Yet again, a pattern. Just as we had impulsive pattern to the upside, we had corrective pattern to the downside. At the tail end of that corrective pattern, we had a falling wedge chart pattern. So that falling wedge is a reversal pattern. And if that breaks, if the resistance of this particular pattern is broken, then that would kind of indicate that the bullish reversal is possibly happening, right? It's not a guarantee, but there's a chance for that, a decent chance. So, of course, we need to understand the context too, and understand, is there a scope for such a move up? And we analyzed it and said yes. There's a big 23.6 fib, and it could provide a bounce for a larger move to 119. And currently it's at 118.50. So this is something we're looking at, in retrospect now, but this is something we were looking at live a week ago and yesterday. Now, from a wave pattern, when you have a strong push up like this, all right, with the oscillator kind of showing a lot of strength, that's typical for a wave 3. So, excuse me. So, and if you have a corrective pattern after that, that would be typical for wave 4. So that's basically, simple wave patterns, right? And that's something you don't have to necessarily use, by the way, but the webinar does, indicate that we'll look at waves and charts. So, basically, if you see a big momentum like that, that is goes a lot further than the wave 1, then typically you are in a wave 3, especially if the awesome oscillator is strong and shows a lot of strength, right? So either up or down, of course. So yes, so this wave 1, 2, 3, 4, that's why we're thinking that this could be a wave 4. Now that wave 4 does not have to be finished, because wave 4s are typically complex and expansive. So what could happen is that this is only the first part of a correction. We go up for a second part of the correction. We go down for a third part. To be correct, these 1, 2, 3 parts of a bigger wave 4 are often called ABC or WXY. All right, that's the lingo that is used for such corrections. So, but that doesn't hinder, right, any trades be taken here in this blue circle, because even if this is a B wave or an X wave and not yet the uptrend, upon the break of this falling wedge, there's space to the upside, whether it's an uptrend or whether it's still a larger wave forward. So there's confluence with regard to waves. Upside is expected with no matter which of the two main wave analysis plays out. And those, of course, are always the most interesting moments, when there's confluence in waves. And that can happen with waves and wave patterns and wave analysis too, that there's confluence. All right? So on Monday, the video I was saying, looking for a breakout. From my point of view, this was the breakout candle, or this one, or even this one. As I said yesterday, that any of these setups were good for a breakout to the upside. When we were looking at the live webinar, price was around 118 at the R1. So I said, wait for a bull flag, wait for a break after that bull flag, probably this morning. All right, so let's take a look at the 1 hour chart. I said that there would have to be some kind of follow through on lower time frames because of the fact that this is a money management perspective. We're at R1 and the space, there is some space, but it's a smaller space. So this is more of an intraday setup, whereas a setup here could be a swing setup because there's more space to the resistance. Because the main target is around 118.75, 119, which is the R2 and the trend line. This zone is again a new breakout, retracement, or bounce spot. All right, so if it's a breakout, then I'll be looking for a daily chart. I said yesterday, if it's a bull flag, I'll be looking for a breakout probably on a 4 hour chart. And if it's a reversal, I would probably look for a bear flag and trade the break of that flag. All right. But in the meantime, and there was also a position trade we said, right? Because there was a candlestick pattern at support. So for those looking at, although candlestick patterns are not the scope of today's strategy, but basically always universally usable in my view. So bullish candlestick pattern, a bullish pin bar at the 23.6 fib, which closed above the support. That could have been a trade setup for daily traders, for traders using daily charts and trying to catch a swing or a long-term setup. So those were setups for daily chart right here, blue circle, 4 hour chart right here or here, and 1 hour chart. There were also some potential signals. Basically, here there was a small bull flag, so the break of that bull flag, or even the next bull flag I talked about right here. So ideally, let's take a look at this zone. right? So you have a three wave down. That's a ABC correction within this flag, right? So where would where could be a signal? The first bullish candle or the break of basically these candle highs, right? That could have been a signal, or even this bullish candle. Those could have been entry signals, basically entry candles using candlestick patterns after a bull flag pattern. Uh, Price broke already above 118, so that's out of the way. There's space up to 118.75, 119, as we said yesterday. That's the next resistance confluence. So these are potential breakout trades or candles that are tradable upon the break of this, or upon the break of the bull flag, or not even the break, but within the bull flag. Here within the bull flag, here after the break, pullback continuation. And yeah, that's basically it. You have basically a candlestick patterns on the daily chart. You have wave 3, wave 4 on the daily chart. You have break of a falling wedge reversal pattern on a 4-hour chart. You have on the hourly chart an uptrend channel. You have on the hourly chart flags and continuation, candlestick patterns within and after that flag. So these are the main things that I think were important for this euro-dollar in the last few days. All right, just making a recap here. So what is basic? Of course, it unfortunately is maybe not as easy to do this by yourself, forward-thinking, live, right? That does require some experience and some training and some practice. There's nothing that we can do to necessarily skip that process. That is a bit of a process that goes into it. And so one thing, join these webinars with Admiral Markets, and you will see how I do that, and basically analyze the charts. I always analyze the charts in a similar way, although I emphasize some things depending on the topic of the webinar, right? So I don't always look at wave patterns because I know that not everyone really wants to use waves or is interested in waves. So I don't want to necessarily bore everyone with those details, let's say. But behind the scenes, it is something that I use for my own analysis, although I don't necessarily always show that in full kind of, full view. All right. So, so this is discretionary analysis, basically. All right. So that requires a little bit more thinking, a little bit more critical approach towards the charts. But the advantage is, although as I said, it takes a bit more time. The advantage is that you learn a skill. You learn really how to analyze and understand the charts. And by doing that, as I've said before, you really are able to understand what's going on and dissect the chart and be able to understand where are the best setups. So the best is always to keep an eye on the higher time frames to understand what is the potential on those higher time frames, and then zoom into lower time frames to try to find trades there. All right. So those were some thoughts that we had on the euro dollar. Let's see. We have a request to take a look at pound New Zealand, and that's fine by me. Let's do that right now. So, all right. There are some lines here, but let me just clear them away. So how would you approach the pound New Zealand, right? If you're starting from scratch, and let's say you're where we are just looking for any type of trade. We're not necessarily a day trader or a swing trader. We're just looking for any particular setup. So let's zoom in or zoom out, I should say, to the monthly chart. First of all, but I just need to reboot my MT4. There was 1 second. So what you see in the meantime, though, is the daily chart, and we do see an uptrend, right? A recent upside momentum. We can see that, and on this chart, You see some indicators. You see awesome oscillator. You see moving average. You see Admiral Keltner and Admiral pivot point. All right, and all of them have their own use. So support and resistance. The main reason or ideas behind the indicators and tools is to indicate support and resistance. So Keltner indicates that. Admiral pivot point indicates that. Then we have trend and impulse. That's why I use moving averages for momentum and direction and trend. And of course, patterns. And I use trend lines to mark chart patterns. I use candlestick patterns, of course, as kind of confirmations of price bouncing or breaking at support or resistance, at moving averages, at trend lines. So let me share the screen again. All right. Now soon you should be seeing the pound New Zealand. I believe that you see it now. All right. So it depends how much analysis you want to do on a monthly chart. It really depends, of course, what type of trader you are. I mean, if you're actually trading weekly charts, then yes, definitely good to do a lot of analysis here. It will be your main kind of time frame. If you're trading on daily charts, well, you might want to look at support and resistance, and that's about it. And you want to look at probably the weekly chart for trends and stuff like that, and daily charts for actual entries. If you're trading on 4-hour chart or 1-hour charts, then what I only do is take a look at the monthly candle, right? So I keep it simple. So what you do with this monthly candle really depends on what type of trader you are as well. That is, I think, important. The higher the time frames you trade, the more important the monthly chart becomes. The monthly candle, the outlook of the candle, whether it's bullish, bearish, the size of the candle, the wicks, always give us good info. And candlestick patterns always give good info about the sentiment of last month, and I think that has an impact on this month. So I think that's always useful info. So if we stick to that for the moment, right? We had a bullish candle with an average size, but the close was pretty near the high. So that's indicating bullish momentum, I think, or at least continuation. So we see basically bearish momentum, but we see a correction to the upside, and price is making kind of a channel in a way like this. All right. So for the moment, I think that the bullish candle together with this bullish channel, all right, and those are important things I think at the moment. So all in all, I would say, for our purposes, bullish at this moment, right? And of course, if this channel breaks, if price breaks through the support of this bullish channel, that would change things, and we're back in a bearish outlook for sure. Even if there's a bearish monthly candle, but for the moment, looks like a bullish outlook. So we have a master, weekly candle, let's say, and what seems to be a small bull flag, which we probably will see a little bit better on, or triangle on the weekly chart. You should be able to see that soon, and some momentum prior to that. So what we see is bullish momentum and corrective triangle, right? Bullish momentum, corrective triangle. So that's looking like a setup for continuation. Now, there could be some resistance to deal with in general, like this, depending on how you draw that resistance trend line. And there are different techniques for drawing that. Either it's about to break or it still hasn't broken yet. All right, so something to reckon with. There's also Keltner resistance here. So yes, the pattern, the structure looks bullish because we have momentum, we have a bullish candle, we have a bullish channel, but there are some resistance levels to think about. So let's take a look at the daily chart right now already. So time pattern, when I count the candles, and that looks like, that this correction is finished because there are more than 13 candles in this correction. So we have momentum. So it seems to me that the pattern, together with this momentum and a shallow fib, that this particular sequence of swings will, it will provide or will kickstart an upside that will break through this resistance. Now, that's a bit messy with all these trend lines, but from a daily perspective, we actually had a break already earlier this week. Sorry. There we go. And that's why I actually traded, well, one of the currency pairs I traded this week was the Euro New Zealand, as I mentioned yesterday. And I like the Euro New Zealand more because of the Euro side and the pound side. But yeah, that was basically a breakout candle on the daily chart. So that could have been a breakout candle right there. Now we still have this bigger structure to deal with. That's why on this particular time frame, I don't think there's any trade right near this resistance level we talked about. But if it does break with a good candle above it, that could be a good breakout candle for the future. So, we are, I think, in a breakout zone. The next breakout zone, if price shows a good breakout candle. We had one here. Now we need a breakout candle of these tops. So that's still pending and still waiting. But anyone who took, for instance, I didn't, but as I said, I took a different pair. But anyone who would take this daily candle and say, okay, I'll take the close of that daily candle, put the stop loss below this low or below the low of the candle, could move the stop loss already below yesterday's low and hope that the price just retraces yesterday's candle and continues. All right, because if it starts to retrace back down here, it's probably not good to hang in there. It could still be okay, but I don't see any reason to do that personally. All right, so 4-hour chart. All right, so we see the breakout in a better light, and we see momentum, we see sideways box, and you probably can see that a little bit better on the hourly chart. And I think that I need to pause a little bit so that the visuals catch up with what I'm showing. One second, I think that, well, you'll see it soon. I'll draw the bull flag already on the 1-hour chart. You should be able to see it soon. There's always a little bit of delay between what I say and what you see, so I don't want to get ahead too far because then you'll maybe lose track about what I'm saying. But so I think you should be caught up, by now. I think you're seeing the 1-hour chart in any case. So yeah, basically for the moment, as long as price stays below this 38 and 50 fib, right? As you can see now, the blue circle. So what could happen is if it breaks this channel, I think the 50 fib could still be a bouncing spot. Some candlestick patterns at the 50 fib, I think, could provide the bounce to the upside and provide the confirmation of that bounce. At the moment, it's actually still in this flag. So let's zoom in to take a look at the lower time frames to look at this flag. Quick look back at the hourly chart. Two dojis last 2 hours with wicks at the bottom. But doji closes. Well, basically, I think if it makes an attempt to break this low, but doesn't break within the next 4 candles, I think it could be a bouncing spot within this range, right? That's one way of trading on the 50-minute chart, right? We see a range on the 50-minute chart. So it could be possible to trade the bounce to the top of that range. That's one idea, right? Another one could try to take a trade here with the hope that it not only reaches the top of the channel, but actually breaks above this channel and heads towards the minus 272 target, 187.50. That could be another idea. All right, so for the moment, it's making a B, C correction. And because of the fact that an A, B, C could be finished, the next bullish candle might also be actually a decent confirmation candle for this breakout to the upside. All right, any bullish candle I think should be okay. Well, not any, but definitely one that closes above these highs, I would say. You might think, okay, but that's halfway this range, and that's true. But if we use wave patterns, we could see an ABC potentially finish there. And once I see that pattern, I'm a little bit more tolerant with trading, especially within this zone, especially if I see supportive factors like momentum, correction, and an overall uptrend on the 4-hour chart, daily chart, and basically the strong monthly candle, and on the weekly candle, what do we see? Yeah, strong weekly candle. So the break of this triangle. So all these things that we analyze. All right. So will this trade setup work, or it's not a setup right now, but this analysis work if it gets triggered? You never know, of course, but this is my best. This is not how do you say it? This is my analysis, my 2 cents, my view, my bias at this moment, and now it's up to the charts to confirm whether it's going to do what I expect it will, and then it's up to me to execute that. And if it doesn't, right? If it doesn't do that, then that's good too. Then I just avoided trading it. That's also possible. Right? If it breaks below this 50, like this, if it breaks, shows a bear flag, I wouldn't take the trade. In that case, there could be a further downside. It kind of invalidates, my view. So this view creates a bias in me, right? So because I have this view, I have a bullish bias upon New Zealand. It's impossible to avoid it, right? I did my analysis. I'm bullish, right? I can't deny that. But we need that. We can't avoid having a bias when we do analysis. What we can do is make sure that we only trade that bias when our trade setups actually occur. What we can do is try to be honest to ourselves with regard to the trade management and try to analyze it without being attached to the trade. And that bias is needed so that we actually execute the trade. But we just need to make sure that the bias is relying on useful tools and concepts like patterns, like trend lines, like moving averages, solid ways of looking at the charts, not just based on some rumor or some thing we tested for 1 hour, right? Because then that bias is weak. That's why you need to practice this so that your analysis gets stronger, and then the bias will be based on more solid grounds, and you'll feel more comfortable with that. Because ultimately, we need a bias to trade. Everyone has a little bit of bias, even if you're following a system. It tells you whether you're bullish or bearish, and that is going to impact you, no matter what you do. So, yeah. All right. So this is you don't have to always do a top-down approach all the way from the monthly down to 50-minute chart. Of course, it is not needed. You could look at the monthly candles at the beginning of the month to get an idea, but if you're using multiple time frame analysis, even 3 or even 2 is sufficient. The more you use, the more information you get, the more difficult it might be to piece it together, but the more info you have. So that's a balance you got to find that what you think is suitable for you. I like personally, I like three, uh, but often I look at two because I know by heart what is the third, so I don't really have to look that much at the daily chart. I kind of know it already, so I stick more to the 1 and 4 hour charts. But once in a while, yes, I do look at the daily. Just that's my main main how do you say it structure or way of doing it, right? So yes, so this is trading wave and chart patterns is indeed all about the analysis and setting up methods how to trade it, right? Triggers, invalidations, confirmation levels, and waiting for those to happen, then executing them. Anyone else have a currency pair in mind? Would you like to take a look at something? We talked about dollar yen yesterday, remember? And I said, it doesn't really make sense to trade it at this 23.6 fib, remember? Right, not sure. Yeah, let's take a look at the hourly chart, right? We were looking at the break of this pattern, or it already had broken, right? So there was this full bear flag breakout, but price was in the meantime when we had the live webinar somewhere here. And I said, doesn't make sense to trade it to the downside because 23.6 fib should be a bouncing spot. Probably will be a bear flag, and if we get a bear flag, the break will be a good downside. We didn't get a bear flag. We actually got a strong bounce to the upside. I did say aggressive traders might be looking for upside trades, although I thought that was quite aggressive because I was expecting a bear flag. We didn't get a bear flag. We got actually an ABC impulse that headed back to the resistance zone and started to move down again. So that just, not necessarily tied to any patterns. Well, it is basically an ABC pattern that played out here, but also important to keep an eye on fib patterns. The fact that the price can bounce at a 23.6 fib, that it acted as support, that the fact that, it's too dangerous to trade a short right into that zone. And now we can see, why. It was good we didn't do that because if we wanted to trade it, it would have been better to wait either for the break and then a bear flag, or wait for a bear flag and then the break, rather than trading it. Get more info, and that didn't happen. So we avoided any shorts there nicely, right? Any trades. And if you're still looking for shorts, perhaps then this wick could have been something better to look at than way down here. So that's just to give you a glimpse of how to combine these things together. In retrospect, but we talked about that yesterday. So I also said keep an eye on the daily chart because if the daily candle closes near the low, that could be a good breakout candle, and that didn't happen. We got a wick at the bottom, and that wick indicating pretty big upside, pretty big indecision. So it doesn't really look like a breakout. Yes, price might make a retracement, right? But this is not a strong breakout candle. So the dollar yen might indeed start a bigger correction. That's not excluded. But yesterday's candle is not for me a signal that would merit trying to trade the reversal, the bearish reversal to the downside, right here, right now. No, it just says wait for more info on the daily chart. And considering the wick at the bottom, the break of yesterday's low is not necessarily guaranteed. It might be a tough thing to do. All right, so that gives us some info about intraday trading too, right? What in the sense that if anyone did take the short of this wick, right, that aiming for the bottom here might be a good thing to do, and not aiming for a break of the bottom because of yesterday's wick. All right, let's see. Anyone else have a currency pair in mind? So with regard to time frames, use a higher time frame for support and resistance. For instance, I use the daily. I use the 4-hour chart for trends and patterns. And then the chart patterns and wave patterns. And on the hourly chart, I'm looking for momentum, patterns, and basically setting up my trade plan. Also sometimes in the 4-hour, right? But very often on the hourly chart. So this is how the roles are divided for my trading at least. But you could use the same approach for different time frames, right? You can move it up one scale and say, okay, I do that for weekly, daily, 4-hour. So I hope, if you have any follow-up questions, feel free to use the chat, by the way, of course, because I'm not sure which parts might need more clarification, which areas you would maybe like to know a little bit more about. I understand that this top-down approach requires more time and is not as easy to do live, as I already mentioned before, when compared to a system that looks at some kind of um, combination of, I don't know, Ichimoku and some cross of I don't know, price going through Keltner or going through. I'm not sure exactly what. I'm trying to make it up right now on the spot, but you get my point. That's just monitoring the charts, doing some analysis, but pretty simple analysis, just waiting for a particular combination, and that's it. And those things work fine as well, by the way. But the disadvantage of that is that these particular patterns, in a way, can break down eventually, and then you're kind of left in the dark. So also by knowing these concepts, you also are better able to spot better trade setups, even within very rules-based systems. So there are multiple advantages. You understand the charts, you understand how to read it, you understand whether the system has a good setup or not, a little bit better at least, and you're more adapt to future changes to reading the charts. Euro pound, euro yen. Great. So unfortunately, the euro pound signal has left the train station. The price has left the train station, and there were, from my point of view, from my SWOT system point of view, there were setups here and here. But even if you don't use SWOT system, then basically, you're looking at a correction. This correction could go either way, by the way, because there is momentum here, but there's an upturn channel. So there could be a bullish break, there could be a bearish break. So that's something that we got to be aware of. There was a bullish break. So this particular signal is a bit risky because it's within the zone, and might be avoided because of that. Because ultimately it could break. It could be this. It could be this. Right. So I think the best breakout candle was just old-fashioned candlestick, 1-hour chart, right above all of the trend line, right above all of these wicks and candle highs. Not with these wicks, but I don't think that's too disturbing because of the fact that the breakout candle close was pretty much right at the high. So if we measure that candle wick, we'll probably get something like, I would guess, 15%. But we can measure it very quickly. Oh, I don't want to lose that data. So the high and the low difference is it's only 11 pips. Uh, well, this is the euro pound, so you can't be surprised by that. It has less volatility. So that's just not so strange for the euro pound. The wick is 1.4 pips. So we're looking at something. Let me quickly do the math. But you got a good, indication that it's not so much. It's about just a bit more than 10%. 1.1 is 10%. So it's actually 12.5%. Very close to the 15% I thought it was. So that's a good breakout candle. So that could be the entry right there, and this trade is going on the hourly chart. It's up 30 pips. Doesn't seem like a lot, but for euro pound, it's massive because euro pound doesn't move too much. Um, so yeah, this is up and going, and that was a good breakout trade within this bullish channel. And I think one of the targets could be the 50 fib at around 90 or 90. We got a 90 level to deal with, of course. Although price actually retested tested 90 pretty much here, so it could be 90.25 too. Those are two targets to think about. Right here, right now, I don't see any trade personally. Maybe if today's candle closes something like this, and we get a bit of retracement of that today's candle, maybe halfway back to 89.60 or so, and there's a continuation to 90.25, and the stop loss could be below today's low, just based on this daily candle. Maybe if we get a good candle close today near the high, it's right at the high now, but the candle is closed. Yes, the candle is only 11 pips but it could be 9 pips for you. But that's okay if and only if it's relatively a decent sized candle for that time frame and pair you're looking at. So the actual number really doesn't matter. It's all about the relative size. So you could still use this concept even on a 50-minute chart, as long as you look at the relative size. Euro pound is a slow mover. And you can see that because this candle, although it's 11 pips on my chart at least, it is still a decent average compared to all these smaller candles we had during the correction consolidation before that. It's still an average, probably above average candle for the hourly chart on the euro pound. So that's fine. And it's okay to use as a breakout candle indication. So, of course, the daily chart, something to think about. Hourly chart, no. There's nothing now because price has moved away from the train station. The train station was here. This is where price was consolidating. This is where it was, taking orders up and down. The banks were dealing here, right? But now price has moved away from that. And to jump in now in the long is, in my view, kind of chasing a trade. Because just because there's a momentum now, we don't know how far this could push. It could push right away, all the way to our target. It's possible. But equally likely, it could make a new bull flag. What could make sense is to zoom in to lower time frames and take a scalping intraday trade that is with this momentum, knowing that we have to be kind of grab the profit before it makes a new bull flag on the 1 hour chart, or worse, it makes a reversal. So 1 hour chart is not appropriate at the moment. The daily could be, nor is the 4 hour appropriate. The daily, yes. 4 hour, no. 1 hour, no, because those setups were here. But the 15 could still be, maybe there could be some potential trade. I'm not sure, but within this momentum. I personally don't think so for the euro pound, but for other pairs, yes, those that move a little bit more, like the majors or some good crosses like euro odd, pound yen, euro yen. Euro pound, not so much. But just for argument's sake, right? So we had the breakout here, and we would be looking, let's say, for a potential trade to trade with this momentum. So we don't see really a nice pattern, I would say, on this time frame, but we do see an ABC correction. So a bullish candle like this, the second bullish candle like that, or even a bullish candle like this, indicating the continuation, in my view, the break, pullback, continuation, could be something to think about there. Or even on a 5-minute chart, then if we zoom in. So we get the continuation, right? So where would be a potential setup? We would be looking for some kind of pattern, probably on the 5-minute chart at the very least, right? To get some continuation there. And well, we don't see really. This is just not even a pattern. It's just a pause and continuation. We do see some retracement here, right? It's not really a nice pattern though. So, but yes, it might be something to think about like that. All right, so that would be kind of trying to trade the continuation of this momentum. We know that there's a momentum going on in the hourly chart, and I would try to grab a small piece of that. And how do we know that there's momentum on? Let's take a look at the 5-minute chart. Right, so we would be looking at a breakout here. All right, so basically we would see this at this moment. We would see upside, correction, upside. So we would try to kind of tag on with this upside and try to trade with these bullish candles here. This was a doji, so indecision doesn't really mean reversal necessarily. All right, euro yen. In my view, trying to break this chart pattern on a 4-hour chart, and that was a good 4-hour breakout candle, I think. So there are a couple of ways to trade it. One could be this low, stop loss here. The other could have been here, depending on what target you have in mind, basically. If you're looking at a smaller target, you might want to use the tighter one. If you're looking at a big target, you might want to use this one. That depends on your target. If you're looking for a target based on, basically maybe a fib like this, where price stopped at 38 and is headed towards the minus 272 target, and you're trying to hold on to that, using the white one makes sense, right? All right. Daily candle also good break, not good, but okay breakout candle above these highs. Candle closed in that high, close above the trend line. So could have been for daily, traders using daily charts. Could have been a setup to think about, either at the candle close or at the candle retracement. And on a 4-hour chart, then it talks about Marabozu candle. I'm not sure if you know his idea, but then you put a fib on that, and basically there are some other things to it, but these fibs can always be support levels, so that could have been one way of trading that retracement as well. So that's a break, pullback here. All right. So, but that was all in the past. How about now, right now? What about now? So, I think that keeping an eye on this daily candle would not hurt. If it's a strong daily candle, I would expect the daily candle momentum to continue. So that might just, be something to reckon with, to think about. What kind of daily candle would I like to see? Well, this is a bit small. I would like to see probably the high at least above 133.50. Oh, wait, that's really far, I guess. Maybe not that high. That seems to be a bit big, but these have been really small candles, really, actually, for the euro yen. Let me try to get a grab of yesterday's candle. 64 pips. Average candle when compared to this. So still okay-ish for breakout, but not that great either. So if you skip this one, I fully understand that. But regarding this candle, we would need at least an 80 pip candle, I think, from high to low to show some kind of continuation in volatility. So probably 132, 133.25 as a high, I think, and a good candle close near the high. So I would like it to at least break above, basically break and close above the R1, make a bit of retracement tomorrow back to the R1, and then bounce up to the R2. That could be something to think about when looking at these daily candles, I think, personally. Now, from lower time frames, we had the breakout retracement on the 4-hour chart. Hourly chart, I would say probably this engulfing twin looks good. That's behind us too, so let's zoom in and take a look at 15 or 5-minute charts and see if there are any particular patterns that could be traded with this momentum, because once again, when looking at the hourly chart, these are bullish momentum candles. So we got to be careful, of course, that the bullish momentum might be over, but this is something that could be worth it, right? We see an ABC. So basically, these breakouts right here could be interesting to trade. Right now, it could be perhaps interesting if price were to break above this correction. Maybe if we get a good 5-minute candle. I know that sounds maybe funny to you, but I think if you get maybe even two 5-minute bullish 5-minute candles, that could kind of indicate that the end of this ABC, it is above the R1, and that could indicate a continuation of this 5-minute chart. And the target, in my view, would be 133.11. There's not, I mean, we're looking at a 5-minute chart, so it's not a lot of space. It would be probably about 15 pips. But that's what you get. It's not a lot of space, so I'm not sure about this. Or maybe even, okay, we could even aim at 133.24, I guess, and hope that the daily candle gets the high that I want to see. Yeah, I don't know. There's some space, but it would be scalp trading from my point of view, and we need the confirmation first of all. The other thing that could happen, of course, is that price makes a little bit of a downside to the 50 fib, and that could also provide still a bounce, by the way. But this is really very nitty gritty, very low time frames, riskier, things happen quicker. So, just as a side note there. Regarding the pound odd, I know that Peter was asking for that one, and I think will be probably the last one for today. Let's take a look. Alrighty. So there we go. Looks like a breakout. We see momentum, and we see a corrective pattern here, and price breaking above that. So it could be a continuation of the trend. In any case, I think we got some space to all the tops. We had a decent breakout candle. So I think we're in bullish territory at this moment. Let's zoom in and see if there's anything. I mean, looking at these daily candles, I don't see particular trade right now. I lost my charts, 1 second. I deleted the pound odd by accident. You see, the thing is, for my drawing tool, I need to hit some combination of keys to activate that drawing tool. And then sometimes I hit, a particular combination, and then it deletes deletes the chart by accident. But you should be seeing the pound odd very soon. There's a blackout for the moment, but anytime now. There it is. Good. So, yeah, basically, I think based on this breakout candle, a retracement of that candle, for instance, at the pivot point, could have made sense. So that could have been a long to think about at the weekly pivot point. That trade could have been up. But right now, I don't see any particular trade. I would need to see probably some daily candle closing above the R1 as a continuation to think about a retracement the day after that. So if we're going to get that today, I don't know. It doesn't look like that for the moment, at least. Today is slightly bearish. It's not closed yet. Let's see how it closes. That will give us some more info. But so for the moment, nothing on the daily chart. I just see this breakout, and from that perspective, it would make sense to check out lower time frames to see, can we trade a continuation of that breakout? Are there any patterns that make sense? Are there any trend lines and candlestick patterns and support that could be interesting? All right, so let me zoom in now to that 4-hour chart. All right, there we go. So what do we see here? We see that price made a move back to the long-term moving average, correction, and even if this is extended correction, there could be an ABC correction, for instance, back to retest these resistances. So I see some space. I think there is some space left, and at this moment we see an ABC correction like that. So from this perspective, we might see the continuation of this C. So if we put a fib from here to here, price might make it to the minus 61.8 target and 171.20. It's a conservative target, I think. So what would indicate the completion of this ABC? I think a good bullish 4-hour candle that is closing above these highs with a close into high, I think could mark that, could indicate that, and could be the entry there, stop loss below here, and aiming at this. If we get a good candle closed into high, and trail stopping maybe candle lows, for instance. All right, I know, for instance, that a friend of mine took a long entry at 169 here, and I advised him to take half of profit at just below 170 and put the stop loss below this candle low and aim for 170.120, right? This way, he locked in some profit on 85 pips on half of the trade and minus 15 on the other half. So all in all, if you average that out, you would make 35 pips on average. So you got some profit locked in. Plus, if this does move to 170.120, you made 150 instead on average. So, and the stop loss below this candle is working well. And you can see it's a dominant candle, and all these candles are still within it. So and he wanted to put it on break even at 169, and I would have taken him out. So you can see the advantages of using candle lows, fractals, support resistance. Even though it might seem very minor, it actually helped to stay in the trade. So yeah, that's just a side note. But back to the hourly chart. On the hourly chart, we might have already a breakout, in fact, but it's possible. Maybe on, I like the 4-hour candle a bit more, but on the 15-minute chart, if we see some kind of correction like this, it could be worth trading the breakout there as well. For instance, we see momentum, so correction, breakout. So probably like the 4-hour chart and the 15 maybe the most, if we get some correction here. And at this moment, there are 4, this is the 5th candle, so I would like to see price maybe go back and forth like this for another 8 candles, maybe another 2 hours, something like that, 2-3 hours, and then after that the breakout I think would be a good timing. All right, if it lasts more than that, if it lasts for another 5 to 6 hours, like this, sideways, then I would wait for the break of the 1-hour chart flag. Then it looks a bit more not so great for this breakout. And of course, it also depends on this 4-hour candle. So to sum it up, basically looking for 4-hour candle or 1-hour bull flag or even 15-minute kind of bull flag patterns and breaks of that towards 171.20. That's my view at the moment. It could go further than that, but I think that's a conservative target just because even if this is still a bigger correction, it probably will hit that 171.20 before moving down again. Well, that's my two cents. And oh, I don't know what happened there, but there we go. Just wanted to show these webinars that we have left this week is naked candlestick trading. Next week we have these short webinars with Jens with real-time daily trading ideas. All right, and Jens will talk with different traders, including Nenet. So check that out. That's next week. And of course, besides naked candlestick trading, next week we got the same lineup. Monday, Tuesday, Wednesday, Thursday. So hope to see you in those webinars, and wish you all great trading. Check out the main page here, for the info regarding Supreme Edition, regarding the webinars, regarding analysis and stuff like that. And talk to you soon. Cheers.